Title of today's show or training session is Option Strategies, How to Choose Your Plan. So the two foundations that we're going to use or have a choice to use is technical analysis and fundamental analysis. Technical analysis is basically using charts and any type of algorithm or uh, volume of price movement to be able to judge what's the most likely direction for the next day, 2 days, or even 5 minutes, 10 minutes of a particular stock price or security. With fundamental analysis, it's basically using the fair value or market value of a particular company and being able to judge that upon four different criteria. As you can see over here to the right, one of them is company analysis. Like as an example, say like Elon Musk, that would actually be considered a good CEO for a company like Tesla, because the background that he has allowed him to make Tesla into the energy giant that it is, and car manufacturing giant that it is. And comparing that to another lesser known energy company, having the personnel of Elon Musk is considered more valuable than having anyone else in that position at the current moment. So that would bring a higher rating or more desirable rating for the company analyst. For the industry analyst, actually being able to see what is going on in the world in that particular industry, using an example of the airline industry currently. It's July now of 2020. So we're currently not experiencing that many flights just due to COVID, and a few airlines have opened back up, but it's nowhere near the capacity that it was before, say, a year ago. So the industry for airlines right now is not producing as much profit or as much volume as it was before. So that would be a negative or something that could be bearish for that particular company or particular industry that you're looking for. That's an example. Economic analyst. Um, so say if you want to look at a company's paperwork and look at their year to date or their profit, their net profit, and just see how much cash flow they have, see how much debt they have. And say if you just wanted to use something as, I want to invest in a company that has 10% cash flow to their asset value, or how much their company is worth asset wise, and has less than $10 million in debt, right? You could use those criteria just alone to be able to find companies that fit your criteria, test it out, and then use that to invest. And then the future outlook profit is basically saying in the next 2, 3, 5, 10 years from now, what is the probability of this company either going up or down in value based on the other three criteria that we just went over, right? So it kind of wraps it all up into one. And once you kind of get a judge or a direction on what you think the company is made of using these criteria, then you can use the final part, which is future profit outlook, to make a judgment on whether you want to option trade to short the company or buy the stock now and ride the wave up in the price because you see a good future outlook, or any other option that you want to use. So those are the two foundations that we're going to use for option strategies, which are technical analysis and fundamental analysis. Here is an example of technical analysis. So as you can see here, we have the basic candlesticks showing the different price movements over, I think this, well, a few months period, because it's each candle here is representing one day. And what you're seeing here on the actual chart are two different indicators. One indicator is just showing opportune times to be able to sell and buy the stock. And these are just suggestions from the actual indicator that you could use on the platform, say like TradingView. But there's hundreds of others. And the second one, in the green, the white, and the red lines, is combining the Fibonacci sequence and the SMA, or the moving averages, for this particular stock, into an algorithm that shows you when it's kind of overbought and oversold, comparing the, say, on the right hand side of the graph, you see it's higher in the green area. So that will be more of an overbought signal for you because it's outside of the middle section of the Fibonacci sequence in SMA. Here's an example of the fundamental analysis, and this puts more of a vertical structure and somewhat of importance. It doesn't apply all the time to all companies, but this is a good starting point. So financial analysis, basically saying that is your foundation on whether a company is good or not. Because regardless of if the company has good plans or good personnel, if they do have an Elon Musk, but they're burning cash every day, they don't have any profits, and they don't have good money management, they won't make it. They can have the best personnel in the world, the best idea in the world, but if they can't manage their own money, then eventually that company will go bankrupt. Situational analysis is basically the same as when I use the example of the airlines and being able to actually see the current structure, the current world view of that particular industry or situation. I'm sorry. So say if the airlines themselves are in a particular situation to where they have stimulus money or basically bailout money from the government, right? And that introduced a buying opportunity for that company stock, say like American Airlines, to where you could have bought it at $12, $13 and rode it up to its last previous high, which was around $21 or so, right? So for that particular industry, the situation of them getting bailout money from the government and the Fed allowed people that saw that to buy into the stock and then ride the stock price up, right? So on our side, we will buy into the stock, but on their side, that is a comparison of, okay, so now we have more funding, we can operate longer without being in a deficit. So that would be how you kind of see a situation analysis. Industry analysis is more of the same of what I said before. The overall industry of the airlines right now is still in a downtrend because we don't have as many flights going out. People aren't still trustworthy of being on planes just because you're so close together and you could easily get sick. And they don't really have too many measures put in place to make that a more safe experience or safe structure for people at the moment. And then macro analysis is just looking at the overall trend of the entire market. So say if the US economy itself would be the macro or the large scale view, right? The wide scale view. So say as an example, the current outlook for the US market is still up in the air because we have had the COVID shutdowns. And back in September of 2019, the banks started needing repo money. So the Fed and government was giving the banks trillions of dollars a night just to keep them open and keep them liquid so that people and transactions could go regularly throughout the day, right? And so being able to take situations like that into your consideration will then allow you to be able to make a macro view or a large scale view on how everything else around the airline industry or that particular airline stock will affect that airline stock. And so that is an example of how you use fundamental analysis in this sort of structure. And the last part here, guys, is the most important part, really. Is that making sure that whether you choose fundamental analysis or technical analysis, is that you stick to a plan that allows you to use a proven method, whether it's a method that you come up with yourself, something that somebody in the group provides to you, or something that you find from somebody else on the internet or reading a book, right? That you use that consistently and stick to that plan so that you'll be able to actually reap the benefits of that plan, right? And there's going to be learning curves that come with it because not many people can actually stick to the plan when it comes to being in an emotional and mentally strenuous situation such as trading stocks or trading options, because that allows your money to kind of be up in the air for a moment in time to where anything can really happen. It can go to zero, the option that you're trying to trade or the stock that you're trying to trade, right? But you're using these foundations of technical analysis and fundamental analysis to be able to find the most probable situation, right? And as you get more advanced with either one of these or a combination of the two, you'll be able to play different stock trades and different option trades better so that your risk management, even still, if you end up losing, say 70% of the time, right? If you win 30% of the time and make 50, 60, 70% profit, but you lose 60, 70% of the time, but you only lose 1%, then those 30% or that 30% of trades that you win outweigh the actual trades that you lost, right? So that's the mindset that helps to be able to make you a profitable trader and just in general to be a more disciplined trader. So that's all for today, guys. Just look out for our next lesson, and thank you.
Excellent job, Caleb. And that was Caleb doing a presentation for Power Investments. Speaking to you now is Troy with Power Investments. Okay. All right, I'm going to wrap this one up, man. I'm going to stop the recording here, and excellent job here. So.